Hey everyone, this is Ryan Valerie for SharePlanner.com. Today is August 7th, 2015. 7 straight days down on the Dow. S&P 500 down 10 out of the last 14 days, 5 out of the last 6. Really just, you want to say, okay, the market's trending lower and everything, but it really isn't trending anywhere. It's just going sideways. I mean, and seriously, this has been like the topic for the entire year of trading. Going back to February, we actually had somewhat of a trend in January that was beginning to come to fruition. And then February, reversed course and went way higher. And then since February is what basically started this not a trend, a sideways pattern that has got the market just unable to escape the mess that it's been stuck in. And so you'd like to get excited about the S&P 500. Okay, it's broken this trend line off at the July lows, but it's not creating a lower low in the process. It's just a very lethargic move. Back in mid-July here, we were sitting at a 21.28 closing level. Since then, the market's dropped 10 out of the last 14 days. And where are we at? We're at 2071. So we're like, 3% off of those highs. But to give you some perspective here, we dropped over 3.2% from the highs here back in mid-June down to much more condensed time period. We fall much more. So I mean, we got this long drawn out 14-day trading period where the market has moved lower, but it's really not in a way that solicits fear from traders or makes you wonder, okay, is this the top of the market? Instead, it's just like a malaise. It's like it's like a thirsty guy stumbling to the desert, there's no rhythm to it. There's no jive. It's just a ugly price action. So right now, I haven't gotten short on this market at all. We nailed Netflix for a 16% gain in the Share Planner Splash Zone. Sold UPRO earlier this about 2 weeks ago for a 1.7% gain, and then we've taken some small losses like Facebook for 1.3%. QLD for let's see here, what QLD for a 1.7% loss. So there's not a lot of gusto in this market here, not a lot of opportunities to trade long. And if you're short, that's great, but a lot of the price action from the market, especially like what we got on Wednesday. Prior to Wednesday, you had a Friday, Monday, and the Tuesday pullback that really just looked kind of like a bull flag. Didn't look like it was on high volume at all. And then you got this push through on Wednesday that looks, okay, we're going to continue this trend back to the highs again. It looked really solid. And then that lunch hour selling crowd comes in and the market just starts drifting lower. And we've seen that a lot lately where you get to that lunch hour, like around 12 o'clock on the East Coast, and then just perpetual place thereafter. So that's been another issue with the bulls. They just can't hold on to the gains, and then you have this convergence of moving averages that who knows what that's trying to tell you right there. But nonetheless, we're testing the 200-day moving average. There has been some precedent in the past for this 200-day moving average holding and then seeing a good solid bounce. This was much messier. We actually did close below it for 2 days, but there was a bounce that ensued right around that area, and then you can go back to February of this year, where we bounced and had pretty much the biggest rally of the year. And then the only other time before that was October, and we crushed, went well below it and then quickly bounced back above it, a week or so later. So the market doesn't like to sit below the 200-day moving average for too long. But here I'm just trying to see, okay, can we actually get a bounce off of the 200-day moving average like we saw the last 2 times? Big story in the market today is AQXP. Let me pull that chart up for you. It's one of those Man, I wish I was in that stock before I decided to rock it 400. In fact, before I even started this broadcast, it was actually up 467%. So you literally got like on this 5-minute chart, you got like a huge move here. I mean, that like if you had gotten, let's say, okay, you got in, and nobody did. I'm sure there's some long-term bag holders and stuff like that are sitting pretty good today, but everybody that's talking really about AQXP didn't get in prior to, until today. And so you got a stock that was trading at $1.79 yesterday on 113,000 shares, which quite frankly is absolutely nothing, rocketing through the roof today for 400+%. So everybody's trying to get a piece of the action and everything. And so we talked in the chat room today. So would I like to trade a stock that goes up 400%? Absolutely. Is it feasible to trade a stock that goes up 400%? No. Well, the better way to say it is it the right expectations to have that your stock's going to go up 400%. That's what the penny stock crowd tries to do. That's what they try to anticipate. They pump and dump stocks hoping to get, a huge home run out of every one of them. That's not my style of trading. Here's why. Okay. This is your 5-minute chart right there, but I'm going to pull it up on the big part of this screen here. All right. You got a 5-day moving average. It just, it's cranking up all day. And what I want to talk about here is risk and reward. Okay. Let's say you put $10,000 on this trade. All right. You got this bull flag pattern that's working here. Looks great. Maybe it's a triangle pattern. Probably more. Definitely has some promise to it. Okay. However, as innocent as this little price pattern setup, and I've traded this kind of price pattern many times, the problem with it is the risk that you got to take on. Now, I'm a firm believer in stop losses. When you set up a stop loss, it needs to be at a price point to where if it's hit, you're not just getting shaken out of a trade, you're getting stopped out of a trade that has gone wrong. Okay? You're getting stopped out of a trade that it's no longer worth being in. So AXP, you want to set up a 3% stop loss on AQXP. There's no reason to do that because you're just going to get shaken out of that trade more likely than not. I mean, for Pete's sake, this thing was up 467%, 5 minutes ago. Now it's up 437%. It's at $10 5 minutes ago. It's at $9.62 right now. I'm not taking away from the gains that it's made from the day. I'm just saying you can't trade this with a tight stop loss. It is literally worse than going to a casino and trying to make money there in a slot machine. Okay, you're more than likely going to get stopped out of a tight stop. Okay, some people will get lucky and that won't happen to them, but more likely than not, you'll get stopped out. So how do you trade AQXP? Well, you've got to take on a lot of risk. Okay, for me to trade AQXP, and I kid you not when I say this, you'd have to get in on like a break here, okay? And everything looks great in hindsight. But if I'm drawing this pattern before that breakout happened, let's just go right like so, okay? If I'm trading this stock, I tell myself, all right, I need to get in on a break above 621. In order to do that, I got to put a stop loss below 538. So we're talking like, I'm just trying to do the math in my head. We're probably talking like a 18% stop loss on this trade. All right. Now, it doesn't stop you out, but let's just say it did for a second. You got stopped out for an 18% loss. You had this risk reward factor. In order to be profitable, your risk reward in conjunction with your winning percentage has to be, in my opinion, at least 2 to 1. Okay. So if you're 50% right, you need to have a risk reward, preferably at around 2 to 1. Now, in all markets, that's not always possible, but in this kind of market where it's just channeling sideways, it's really hard. But that's what you want to shoot for. Okay, so you get wrong on this. Guess what? You need a trade that makes you okay. If you're wrong, you get stopped out for an 18%. Let's just make it easy and say 20% loss. Okay, that means that your next trade or a combination thereof needs to be about 40% of a winner. Okay, so even on AXP here, So you're going into this AXP. You need to make 40% off of this trade. So you go from 626. You need to get this thing up closer to like $8.50 to $9 to really make a good trade out of it. And yeah, it's possible, but I mean, you could see there's not a lot of room for error getting in at this stage of it and hoping that it can get out. Now you got a situation to where it's bull flagging again. You see the previous bull flag, and you're like, oh, this is going to be a good trade. This is the opportunity to get in. I missed the last bull flag. I'm going to get in on this bull flag. So you get in on it, and guess what? You get long, but it's not really breaking out at this point. You could get in, and that's probably not really a great line. Let's just draw the top line first for simplicity's sake. You get in and you see this thing bull flagging here. Okay, it looks just like what we saw before. It almost breaks out, and you see, all right, this thing's getting a third leg up on this trade. So I want to get in on a break of 1038. Okay, I'm going to get in on 1038 and put my stop loss. It's holding that 20-day moving average really good. I'm going to put my stop loss below 10 or below 930, so like 928. So 1038 is my entry, 928 is my stop loss. What happens from here? You get stopped out, man, and that's pretty much a good shakeout right there. But you get stopped out. 918, okay. It goes all the way down to, is that what it was? No, the low's 912. So you get taken out, and then you see it come back up, and you get pissed off, and you probably make a trade that you shouldn't have made again. So any case, so what I'm trying to say here is that AQXP, it really could destroy your ability, the risk reward ratio intact, because you take these stocks that are like 20%, and that is serious stuff. I mean, it's not easy to succeed when you're taking on that much risk. Okay. What is a lot easier to succeed at is when you're taking like risks that are like 2%, 3%, and then trying to make like 3-4%. And then like my average stop losses is like 2.5%. You take, or not even 2.5%. It's my initial stop loss is usually around like 2.5%, 3%. But more times than not, I'm usually getting stopped out of stocks for like a 1.7%, 1.8% loss historically. Now you take my winners; they're much better than that. So my winners are trying to be around like 3.7 to 4% range. That's usually what I like to average around. And so you take that and you get like something like Netflix, where I came into it with a tight stop loss. Get off of this 5-minute chart here, but you take it there where you have a very tight stop loss. It was very well defined. Break out of this bull flag pattern here, and you're off to the races. And that's exactly what happened, to put the stop loss right here below the 728 lows. If it breaks that level, you know that you need to get out of that trade. It shoots up, makes 16%, and here I'm basically getting like a 7 to 8 to 1 return for the risk that I put on there. Now AQXP, yeah, percentage standpoint, man, it looks like golden opportunity here, but it throws your whole risk reward just completely out of whack. I'm not hating on the gains. I don't know, man. Maybe this thing goes up another 300% on Monday. I don't know. Okay, but my job isn't to look at the stocks like everybody else does and say, oh, it's up 400%. I need to get in on that, see if I can make myself a 10, 20% gain. No, that's not what you do as a trader. Your job as a trader is to look at not the potential gains. You look at the risk and say, can I manage the risk in such a way that I can keep my stop loss tight and know that if my stop loss is hit, that it is time to get out of that trade with a reason in hand. It's like that stop loss gets hit, you know that you need to get out because the trade is now defunct. AQXP, you got to put a stop loss of like 20% for you to realize whether or not your trade is defunct. And if you take a 20% stop loss or hit on that trade, man, how much pressure do you have to put on yourself to be able to make those losses back on your next trade? So that's what happens here. You get a lot of people who trade these penny stocks and everything and these low dollar momentum plays, and they've got to be hitting home runs all the time because they're constantly taking these bad hits. So these people who are promoting stocks like AQXP in their newsletters and stuff like that, they're selling you false hopes on being able to be consistently profitable year in and year out. And so I guess at the end of the story here, what am I trying to say? watch out for these kinds of plays, that they don't suck you in to want to make it, because at the end of the day, you got to manage your stop losses. And in order to manage your stop losses appropriately, you need to set them in areas that are in tight consolidation periods, to where when it breaks out, if the breakout doesn't happen, or if the breakout, is just a head fake and it stops you out, you're being stopped out for a small loss, so that when you do get the stocks right on like a Netflix or some of these other trades that have done really well, there's not a lot of them out there these days, but the ones that do well, you're making up for a plethora of bad trades, or I shouldn't even call them bad trades, but for losing trades. There's a difference between a bad trade and a losing trade. A bad trade is one that you got into it for all the wrong reasons, for that you should never have got into in the first place. A losing trade is a stock that you got into it for the right reasons. The trade just didn't, a small loss, and you're moving on to the next trade. Okay, but when you let your winners run and it runs and everything else, what ends up happening is you make, your winning trades covers up a multitude of losing trades. So you got to look beyond what you see in one trade happening on one day, and you got to look beyond that and start asking yourself, what's going on in the grander picture here? What am I doing with 300 or the 400 stocks that I trade in a given year? And how am I manage globally the stop losses on all these trades, the profits on all these trades, and the winning percentage on all these trades? And then that's how you get the success in the stock market. You're not going to get it from trading at AQXP. I promise you that. You're going to get it from managing stop losses across your entire portfolio, not letting your one stock at all in your entire portfolio run against you like a Twitter here. Trade Twitter, guess what? You got to follow your stop loss. And you know what? We were actually in Twitter not too long ago, okay? We were in Twitter when, right before the earnings here, we got stopped out here, okay? Now, what if we got stopped out on 7/24, okay? What if I did not listen to my stop loss on this? This kind of a trade destroys portfolios here. I don't follow my stop loss, and guess what? I'm looking at like a 30% loss on this stock. Do you realize what that does to the rest of the profits that I've worked on meticulously throughout the year? This is a show killer right here. That's why you have to follow the stops. You have to use tight stop losses, because it is easy to slip up. And that's what the market's doing. It's waiting for you to slip up on one trade, people. That's all it's asking you to do, is mess up on one trade, because it will take you to the cleaners. Okay. So I avoid the AQXPs, because the opportunity to destroy a year's worth of work is real in a stock like that. So I'm going to step off of my soapbox. I think I've made my point here. Trading stocks goes far beyond one particular stock. It is a track record of consistently managing the risk. If you don't manage the risk, you'll never enjoy the profits. That's going to be it, man. You guys have a great weekend. If you have any questions, feel free to contact me, Ryan@shareplanner.com, or you can hit me up in the chat room. If you're not a member, sign up for my chat room. It's you can see for yourself. I post my past performance. Nobody else does that. You can see every trade that I've ever made on SharePlanner. I'm proud of it. I'm very proud of it. I post years of performance. You can see my entries, my exits, how I manage the risk. And you can sign up for free 7-day trial by going to shareplanner.com/splash zone. And you'll get all the information there. Once again, you can email me as well, but love to have you in there. I'm in there every day. I probably should take vacations, but I really don't. So you guys have a great weekend. Enjoy it with family, and it's a hard market. It's a hard year to trade. You gotta manage risk like never before in order to get any kind of profits out of this market, and that's what we're doing in the splash zone. Y'all have a great weekend, and God bless.